All right, guys, what's going on? This is Ryan, aka Cantering Clark with BlockRoots. As always, thank you for tuning in. For anyone who is new to the channel, as long as you are a subscriber to the YouTube channel, if you leave a comment in this video, you'll be entered in to win $100 in Bitcoin. We do this for every single video, and this week, $100 goes a long way compared to last week, right? So, mayhem in the markets. And I'm going to try to keep this video as brief as possible. But this morning, of all mornings, my wife and I decided to sleep in. And for us, that meant sleeping for an extra half hour. All right, so normally 3 days a week, we will be driving our niece to school. All right, and this is because my brother-in-law and sister-in-law work in the healthcare industry. And on these days, they can't get her to school. They have to be at work a little bit earlier. So we help alleviate that burden for them. And we drive our niece to school, and it just happens to be that the school district closed because there was a bus driver that came down with the coronavirus. So we got to sleep in this morning, and I woke up to a text message from Josh that had a slightly ominous tone. It definitely didn't cross my mind that it could be in relation to anything positive when he said something along the lines of "holy shit" or any other type of hyperbolic exclamatory remark. So I figured I'd be waking up to somewhat of a mess, but I didn't expect to see it down in 5,000. It just goes to show you that you should never speak in any type of certainties, never make any really bold predictions, because the market, again, not only can it remain irrational longer than you can remain solvent, it can and often will do the most unexpected things, especially an asset like Bitcoin that does, as I've always said, represent what we normally would refer to in traditional markets as a high beta asset. All right. So I said yesterday, that equities right now are a systematic risk to crypto. Normally in crypto, Bitcoin is the systematic risk to the crypto market as a whole. So if Bitcoin experiences a large drawdown, and we know what panic is like versus just a pullback, then a lot of times alts will suffer. And of course, you'll have a few alts that stand out and they're more or less exhibiting some type of anomalous behavior, and that they're able to withstand maybe what is occurring in the market as a whole, only for so long though, right? So we see Link maintaining a lot of strength, and then that's only to a certain point until all correlations pretty much go to 1. So equities are a systematic risk to crypto, even though crypto is 99% of the time uncorrelated to traditional assets. And I think that that's just because it's so small and insignificant. It's not in anyone's 401k, put it that way. So it likely doesn't make up a big portion of people's capital the same way that traditional assets do. I know that a lot of people in crypto, they are definitely overexposed to crypto markets as a whole versus being diversified across a broad spectrum. Not to say that anyone's crypto allocation is not meaningful. If anything, it's probably hazardously overallocated to, all right, and not very balanced. But equities are the systematic risk to crypto, all right? When all markets are experiencing a move like they are, we're not seeing that crypto is acting as any type of store of value. And there's a few things to talk about. I'm going to try to keep this as brief as possible. But if anything, the argument for a store of value is it's nullified at this point. All right, at least right now. All right, because we see that even gold is not doing a good job, and we talked about why that's occurring in the last video. Now, the crappy thing is that the future is path dependent, right? So now any asset managers that were kind of on the fence or sidelined and uncertain of how what type of behavior that Bitcoin would exhibit during a time like this, they're getting a perfect example that right now it's actually not serving that purpose. Okay, that was often romanticized and built into the narrative. So it's unlikely that we're going to see them kind of jump at the bit in the near future in terms of getting involved in Bitcoin to take advantage of what it was said that it was supposed to be, right? A store of value, sort of digital gold. Okay, this doesn't mean anything for the long term. If anything, what it shows you is that people in crypto have a very myopic view of how markets should work. If you talk to someone about long-term allocations, they'll probably say somewhere along the lines of 6 months to 1 year. For me, my long-term allocations, coming from the asset management space to begin with and just having this drilled in, it meant 5 to 10 years minimum, right? You're not talking a matter of just a year or 2 years. You're talking way longer time horizons than people will refer to in crypto, right? But it makes sense because crypto is such a new market and there's a lot of first-time investors, and it is what it is, right? So I talked about equities being the systematic risk to crypto, and last night when Trump spoke, We saw that right when the market reacted to his speech, crypto market reacted at the same time. We saw that sell off. And what we're looking at right now is we're looking at pretty much futures market that is limit down before we open traditional markets, and then right after opening, we are experiencing circuit breakers. All right, so limit down is 5%. Circuit breakers are during normal market hours, and there's 3 of them. All right, so if the S&P drops, I believe it's 7%, first circuit breakers hit, we're going to pause for 15 minutes. The next one is 13%. Again, pause for 15 minutes. And if after that point, before the end of the day, all right, if we drop 20%, for the whole day we're in a trading halt. So trading will resume the next day. And this is 4 times like this when no matter how rational people might be in good conditions, when things are going the way they are right now, we see people just panic. And the last thing that we want is a total collapse, all right, of a system that is extremely over leveraged. All right, during times like this, when there is a ton of panic, the same way that it works in crypto, okay, and a lot of you have learned a ton of valuable things that you could take to other markets, the same way that when there's a panic and people are over leveraged on exchanges like BitMEX, Bybit, Phemex, all of these derivative exchanges, we see this cascade. Well, that works in traditional markets as well, but as you can imagine, the leveraging is a lot different. All right, it's not that they're 100 times leveraged, but portfolio managers are kind of leveraged to the hilts, all right, across the board, right? So they have to kind of borrow from Peter to pay Paul in some cases. And by that, I mean they have to take from some positions that are doing well. And a lot of the times they do this because they want to make sure that they're, as much as they could scrape away for the end of the year, as far as their performance goes, they want to have a more balanced number versus having, maybe something that should perform reasonably well and then having all of their other assets perform extremely poorly and potentially be forced to sell those positions. They're going to borrow from those better positions to balance out the offset caused by, negative excursions in the others. So what we're seeing is equity markets pretty much just selling off across the board. And I think that we're approaching, after Trump's speech last night, not to get into anything political whatsoever, but after his speech last night, the market reacted. It was not confident. I think that, I want to say, right? I want to say and be confident in what I'm saying that was a dumb mouthful. I want to be able to say that, we're probably past the point of priced in. Okay, so I think that the movement that we're seeing now is just total panic, and we'll see hopefully some type of rebound, some type of rubber band effect. All right. I don't think it could get much worse until we have maybe a lot more data come in, and hopefully there'll be some type of period where the waters can settle before that occurs to where we could kind of catch our breath. All right, and then maybe if we catch a bid in equity markets, Bitcoin can catch a bid as well. If you just look at Bitcoin right now and the E-mini S&P, it sort of look like looking at a lot of the major cap alts, right? You see how the charts kind of look the same. And short-term correlations, maybe they don't stack up in the long term, but I don't care what anyone says. Look at a 1-minute chart. When shit hits the fan with the E-mini or with the S&P, okay, with the SPY, SPDR ETF, whatever you want to talk about, any of those larger assets in traditional markets or indices, you're seeing Bitcoin kind of just dance in tandem with it. So I need to see that what we're looking at right now catches a bid. And by that, I just mean that it's, people are starting to buy and we're going to see some type of base put in. And, all those valuable lessons you learn in crypto, all right, about market structure and about identifying who's in control, well, the same thing applies, okay, in something like the ES. Maybe if we're trading the DAC, it's not the same. So we talk about order flow and we're trading Bitcoin and we're trading oil, and you'll see that order flow will be one way in those assets, but if you're talking about order flow in the E-mini S&P versus the DAC, it's a lot different. Keep your eye on the E-mini S&P right now. Keep your eye on the ES. That would be the ES symbol for any of those of you who are unfamiliar with this. Okay. Right now, until we catch a bid in there, I'm not really confident in Bitcoin. I'd say that Bitcoin is worth trading in the short term right now for taking intraday positions, very short term positions. This is a trader's market. Keep that in mind. This is a trader's market. This is not I'm just going to buy because we're at we're close in proximity to the 200 weekly moving average, right? Someone might say that, and they might end up being correct, okay? But that's always going to happen no matter what, okay? No matter what, if we put 100 people in a room and we say make a bold prediction, I don't know what the figure is, but you can imagine that a few of those people in the room are going to be completely correct, even if it seems asinine to begin with, okay? And it's not an actionable thing to do to just say something that, by chance will be correct, but is not, I guess, would not rather fall under what I would consider prudent decision-making practice. All right, so short-term trading right now, okay, if you've never traded during a hyper-volatile period, okay, spreads are going to be wider. So if we're looking at, just for example, we'll go on to an exchange that we've been talking about recently. We'll go on to Phemex, okay, and we'll take a look at the spread. So we'll start trading. All right, we'll take a look at the spread right now, and the spread is 61.66, 61.65, okay, 50-cent spread. All right, now decent job, right, by market makers in maintaining spreads across the board on derivative exchanges, but you can't just go off of the spread from, first bid, first ask. You'd have to imagine if you're throwing $1,000 at the asset right now. All right, if you're throwing, as far as spread goes, I wouldn't just consider the nearest bid and nearest ask. All right, I would consider the nearest, just arbitrary number, $50,000 in bid versus ask depth. Okay, how does that behavior change across time? Just one static picture is not enough. Right? So regardless of what you see on these exchanges as far as the spread goes, understand that the spread is wider right now, all right, for any meaningful amount of money. So if you're trading, okay, you have to take that into account. Wider spreads, lower liquidity, lower volumes overall, it takes less money to move the market. All right, when it takes less money to move the market, we're going to see price make extremely violent move. There will be rather extremely violent movements, all right, within the asset. So back over here, you're looking at this morning, okay, you had the course of 1, 2, 3, 4, 5, 6, 7, 8. In 8 minutes, okay, we moved from 6,600 back down to 5,600, and in the next 1, 2, 3, 4, 5, 6 minutes, all right, we were $1,000 north again. So as you can imagine, there was a lot of pain down here. All right, how many people do you think sold this anticipating much lower, and then 7 minutes later we're $900 up? All right, so this is the type of market we're dealing with. And now trading in, all right, I would say good conditions is something that is tremendously difficult to begin with. Right now we have, using the term suboptimal is not an adequate term. We have extremely, for anyone who's new, these are extremely dangerous conditions to trade within. All right, so if anything, if you just want to get kind of earn your stripes right now and you want to trade this, trade a quarter of the size. All right, and I don't want to give anyone any financial advice, but one of the practices during times like this, times of greater uncertainty, all right, greater volatility, just look at something like the ATR, for example, which is average true range. We're talking about something that measures the range of price movements over something like a 7-day or 12-day or 14-day period, depending on what your average is. That ATR is going to be greater now. Okay, there's going to be a lot more dispersion in movement. All right, and for this reason, you should tailor your method to the conditions you're dealing with. Okay, you should trade. Your method should be contingent on what type of environment we're trading within, and what that means is consider sizing down. Right, it's difficult as it is to trade in perfect conditions. All right, in utopian conditions. So imagine that right now, these are the most trying of times, even for traders. Okay, so no one has to play a hero right now. If anything, it might be beneficial for you to just observe, right, and take notes, and wait for the dust to settle. All right, you'll see when we start to have a moment where you'll start to see when maybe the dust is settling and the coast is clear. I don't want to say that and insinuate that there's one structure you should look for, or there's one condition you should look for. It should be the 200 weekly moving average that you buy. All right, you'll see that if anything, we'll see a decrease in that delta to the downside. So negative delta, for example. We'll start to see less aggression on both sides, and hopefully maybe volumes drop off a little bit more, and we'll start to see maybe equities will catch a bid, Bitcoin will catch a bid. We'll start showing that strength in microstructure first, and again, I don't want to say anything specific because even I am not completely certain about what is to come for the next week. It seems like even in the United States, that because of the inadequate amount of testing that is available, that the worst is likely yet to come. So the market as a whole, okay, is not. I would not say it's even worth going over alts, because if anything, the whole market right now is just experiencing the same. There's nothing really that is a haven right now. There's no alt right now that is even worth going over as far as levels go, right? So Link finally, Link on Binance hit 0. Okay, so if you thought that if any stop was safe, okay, and today, just a prime example, on crypto Twitter, we are ruthless in how we treat exchanges when they handle certain times of when they handle certain periods like this. Okay, and this is the first time that crypto has really experienced something like this. Crypto wasn't around back in 2008. If anything, crypto was the product of what happened during 2008, but it's never experienced this type of volatility from other markets and being around these other markets as a whole. And it's really tough to run an exchange. It's really tough for market makers to even step in to continue to provide liquidity, right? To step in the way of any type of pressure. It's hard for them to not just step out of that, okay, and avoid that flow toxicity to protect themselves. And then we see that we have these really violent movements across the board. And just as I think it was Hunter Morsley, I shared his tweet. There are plenty of people on Twitter that you could learn it. You could gain a tremendous amount of value from, and Hunter is actually one of those. He talks about how 72% of the orders on Coinbase are buys right now. So it looks like retail is mostly a buyer today so far. And kudos to anyone who is kind of willing to step in the way of this and jump on the grenade. But what he said was that there are a lot of market makers who also make traditional markets, okay? And the same way that asset managers needed to pull from gold, right, to pull cash from gold to put into other positions, all right, to protect those positions, we see the same behavior between crypto market makers pulling from crypto allocations, all right, to protect themselves in traditional markets, all right, because they needed the cash. So again, during times like this, the saying is all correlations go to 1. So I think that about covers it. I didn't want to get into too much, but if anything, just understand that this is a black swan event. All right, this is for all the times that word has been thrown around for to just talk about large movements. This is an actual black swan event. All right, if any of you are familiar with what's his name? Why is his name? Why am I at a loss of his name right now? Nassim Taleb. Right? If you're familiar with him, he wrote the book Black Swan. Okay, and he talks about these type of one-off events that even models don't predict for as often as they do occur. So you might see that this type of 7-8 sigma event is supposed to happen maybe the model will say, for example, 1 in a billion years. But we'll get these 1 in 10 years, 1 in 20 years, all right? 1 time out of 10 or 1 time out of 20 years. Okay, so this is one, and it's as bad as it seems right now. Okay, but I don't know. You have to stay positive. All right, I don't know how to tie this one up, but that's it, guys. All right, so right now the ES is at 26.35. Okay, S&P is at 25.93. Trading resumed. All right, Bitcoin 61.34. Levels right now that I'd be looking at. As far as next level down, I'm looking at this cluster down here and then basically 4,200, top side of this range. And we never thought we'd be talking about that. Maybe many of us didn't, and sure enough, we are now, right? So adapt and survive, all right? No more kind of vapid statements. I don't have any more. But that's it, guys. All right, so as always, exercise proper risk management, trade effectively, and until next time, hold on to your hats.